Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Equity markets are carrying over that exuberance after non-farm payroll. A strong Friday session has become a strong Monday session. However, don't chase the tape higher. We like using this as an opportunity to take profits. We've been bullish for a while. In fact, our target in the NASDAQ was 7085 to 7100. We're missing this move, and we're fine with that. The S&P trading into resistance 2744, 2745, trading out above there, but we have major three-star resistance just above 2755, 2756. This is where the close was and gap down from March 16th. Be cautious at this area. Exuberance from a non-farm payroll on Friday into Monday. Then usually see a little bit of a correction on Tuesday. We're looking to buy that pullback. We talked about in the Morning Express. First test to 2730 would have been a buying opportunity. We're not quite seeing that. It's staying bid, but look for that maybe tomorrow. Again, the first test should be a buying opportunity. See what happens. We've got a lot of trade talks in the news. The factory orders, durable goods orders, nothing really to write home about. ISM non-manufacturing tomorrow. But again, keep an eye on the trade talks. Obviously, the tariffs introduced against the EU, Canada, and Mexico last week with the G7 summit coming up. And then China and U.S. trade talks have hit a little bit of a hurdle. So keep an eye on the news there, and developments could bring the stock market back down just to a buying opportunity. So watch for that. Moving on to crude oil, hitting major three-star support down at 65, just below 65 area. 100-day moving average down there at 64.70. We like buying crude down here. Be careful though. Inventory is coming up, and again, one of the catalysts keeping this thing down is crude stockpiling in Oklahoma and Texas from pipeline constraints. So right now, this is overpriced into the downside. We could see a relief rally from EIA, but still approach it cautiously. We think there's a lot of value in the 65 area, and we think this thing should bounce. But again, approach it cautiously. Give us a call. We're here to talk about that. And lastly, the Aussie dollar. We talked about in the tradable events. We think the risk is to the upside in the Aussie dollar, on a risk-on environment. We think the Aussie is ready to capitalize most against a weakening U.S. dollar. Remember, the dollar index is 57% the euro, so you got to watch out for the euro if you're just simply selling the dollar index. We do like buying the Aussie. In fact, it traded a penny higher overnight almost. We put this thing out on yesterday afternoon. You had an opportunity to buy it below 76. If you didn't, look for a pullback back into 75.80, 76 as a buying opportunity. We have the RBA meeting tonight, and we think that, again, the risk is the upside from whatever the RBA could really come and say. Retail sales beat last night out of Australia. And we like this trade not only just in the near term, but over the longer term. And we believe the dollar is going to weaken. And again, this is the best way to capitalize. Give us a call. We're here to talk about it. 312-278-0500. Email us info@bluelinefutures.com, as well as check our website for updates. And remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thank you.